Welcome everyone that's on this Q&A investor webinar session today with Birchal. My name's Mel. I'm the campaign manager here at Birchal. And before I introduce our founders today that are presenting with us, I would like to acknowledge the traditional owners of the land we are beaming to you from today. Birchal is based on the lands of the Wurundjeri people of the Kulin Nation, and we pay our respects to their elders past, present and emerging. Our Q&A investor webinars are an excellent opportunity for our potential investors to engage directly with our founders here who are launching live campaigns on our Birchal platform. Today, I'm joined by Benjamin McGowan, who is the Managing Director and founder of Indigo Power, and he is joined today with Rick Thwaites, who is the Chairman of Indigo Power. Indigo Power are building a network of community batteries to share clean, locally generated energy with Australian regional communities, and we look forward to hearing more about their business and what they plan to do with the capital raise that they are going to be raising here with Birchal. So today we will hear from them for about 10 to 15 minutes, and then following that, we will then switch to a Q&A session. If you look to the bottom of your Zoom screen, you will see a little Q&A bubble. If you have a question during today's session, please pop it in the Q&A box as we go along, and we will answer this during the Q&A time at the end. If you need to pop away, don't worry. We will be recording this session and we will be uploading it onto the Birchal platform and onto the Indigo Power profile. So enough from me. Now we can hear from Ben and Rick. Thanks so much, guys. Take it away.
Thanks, Mel. So, yes, my name's Rick Thwaites. I'm the chair of the board of Indigo Power. I'd like to welcome everybody to this webinar and thank you for attending. I just want to introduce this by giving an indication how excited the board is at the juncture we find ourselves at. The board feels we've come a long way in the last few years. The company is changing quite rapidly, and the shift into producing locally generated and shared power is a transformational stage for the company, where we can build battery systems in many communities across the regions. So we see this as a really exciting stage for the company, transformational. And this next stage gives us opportunity to leverage off the ARENA grant that we've received and get a lot of work done, get some fantastic assets into our portfolio. So I won't take any more of your time. I'll hand over to Ben for the more technical side of this presentation, but welcome everybody and thank you for your interest.
Thanks, Rick. So this share offer is all about becoming an Indigo Power shareholder and helping us unlock $5.8 million of clean energy infrastructure. So it's the purpose of the capital raise, and I'll explain a little bit more about how that happens in this first bit of the webinar. So I'll go through quickly a little bit about Indigo Power and where we're up to, something about the offer. The offer is all about community battery infrastructure. So I'll talk about that particular project, a little bit of high-level financial information, next steps, and a short summary. So for those of you who don't know Indigo Power, we are a public company. We have about 850 shareholders at the moment, and we're incorporated and early on in the stage became a certified social enterprise. And a social enterprise is a company that trades for a purpose, and our purpose is to create a society powered by 100% renewable energy in a way that supports and empowers communities. There's three really clear things that we do. We deliver an electricity retail offer to values-aligned customers. And electricity retail for us is all about connecting our customers with local sources of renewable energy. We're a registered electrical contractor, and we deliver community-scale renewable energy projects on behalf of third-party clients. Is a important part of our business. And this capital raise and a real growth area for Indigo Power is our clean energy asset management side of our business. We've also got a sister organisation, the Indigo Power Foundation, which is a charitable organisation that Indigo Power Indigo Power works with as well. So we incorporated in 2018, and this is a little bit of the history of what we've achieved so far. So retail growth is all about reaching the values-aligned customers, people that care about our mission. So growth has been slow and steady, and we have a really low rate of churn in the business. Customers tend to stay with us and support our mission. In the most recent Greenpeace electricity guide, we were ranked as one of the great innovators and one of the greenest providers. And more recently, we've launched our energy sharing software, which gives customers in our communities a view of how much energy is being shared from local sources, which is really important for these community batteries. And we've recently launched a plan to overlay a pricing incentive on top of that to incentivise electricity consumption during times of high solar production. So that was launched a month or so ago. Our project management business, we've delivered really large projects, particularly developing expertise in energy resilience. So after the Black Summer bushfires, we've delivered megawatt hours of battery storage across tens of sites, solar power systems, communication material, to make sure that the communities impacted by the Black Summer bushfires are better prepared with backup storage at the next event. So working with the Upper Murray community in Victoria and across the Tumbarumba region as well on projects that are about $5 million worth of project management work. And more recently, that's grown into working with local government authorities as well. So we're doing a large project with a Towong Shire at the moment, the Towong Resilient Buildings project. More recently, we've developed a real expertise in community batteries, and we're now doing a lot of work for third-party clients, delivering community batteries and doing the early stage technical and financial analysis for community battery business cases as well. Our asset management business started with Yakko 1 in 2021. We're just about to commission a Yakko 2 with totally renewable Yakandanda and Indigo Shire Council. We've, a couple of months ago, commissioned the Yarra Junction community battery, so that's now operational. A 100 kilowatt charger in Tumbarumba, also a couple of months ago, was recently commissioned that Indigo Power owns. We have 2 batteries coming to Wodonga that are funded, about $700,000 of funding from the Victorian government under their 100 Neighbourhood Batteries program. And now this capital raise all about the community batteries for energy resilience, which is an arena funded project. We've developed a really good team. Rick represents the board today, but the board has a really good skills-based board, six non-executive directors and myself with skills from risk, financing, accounting, community engagement, business management. So a really skilled board and a really skilled staff team as well. So we have an electrician with over 20 years experience working in commercial electrical industry. We have a PhD engineer, operations and sales staff, as well as a project management expertise as well, and really low staff turnover. So the staff team, really one of our major advantages. So where are we up to as a company? We've built a strong foundation. So we have a good brand in specific and reputation in specific circles in local government, in the electricity industry. We have a growing project pipeline. We have increasing confidence in our retail service and product as that starts to deliver positive financial outcomes for the business. And we've got an excellent team and strong governance developed over the last 6 years. And where we're heading to next is a really stage of growth and scaling. So retail, we're going to continue to target modest, profitable retail growth, which is where we're at the moment, and looking at increasing margins through the deployment of all these, managing risk in our retail portfolio through this fleet of community batteries. So strategic growth of our project pipeline, focusing on community battery delivery on behalf of third parties on our energy resilience expertise, and particularly with our growing pipeline in local government. but significantly, it's about the next 2 years. A large focus will be on the growth of the asset side of our business. We'll obviously be investing in a portfolio of our own, but then working with third-party clients who also own batteries to operate and maintain them on their behalf. So the offer, it's all about the ARENA-funded community batteries for energy resilience. So there's to deliver 10 community batteries, 5.8 megawatt hours of storage, which is significant. To deliver 680 kilowatts of solar, and one of the sites has an existing 100 kilowatt hydro, run-of-the-river hydro facility. And we've got $4.2 million of ARENA grant funding. The contract's been signed, conditional upon us delivering our co-contribution. So we're in the expression of interest stage at the moment. Once that closes, you'll have a chance to, if you've expressed an interest in this private investment stage, to convert that to an investment before that offer opens up to the public. So expression of interest at the moment. If you haven't expressed an interest, feel free to do that. And then actually converting that to an investment from May 6th to the 22nd. So a little bit about why we've invested so heavily in community batteries and where this project has come from. So we installed one of the first community batteries in Yakandanda in 2021, commissioned in 2021. And that was really an important marker on the community battery journey. There were very few at the time, and it's been a real opportunity for us to pilot the technology, the commercial model, and these types of things. And we've used that to become, and we've made, I think, a good contribution to the conversation around community batteries. And we're now seeing significant government grant funding for battery technology at that scale. Yakandanda was all about renewable energy. How do you supply renewable energy to the local community? We had this experience with the Black Summer bushfires, and our work through there demonstrated to us that rural regional communities really care about batteries because of the backup storage they provide. We were funded by the federal government for a 2-year feasibility study on bringing those two objectives together in a commercial model.
Are you interested to listen to this?
A fleet of community batteries.
The webinar on the 10 batteries and the equity float to pay for them.
Sorry, there's someone on audio.
Yeah,
Carry on, Ben.
So the feasibility study, really a lot of the technical analysis for which sites, where, the design, but also the commercial model for how you would deploy them. We've since delivered or been funded to deliver 4 more community batteries, which are in various stages of operation or development at the moment. We did a big piece of work for 22 local government authorities right across regional Victoria, developing business cases for sites at those local governments that delivered a resilience benefit, and 11 of those were recently funded from the Victorian government as well. So that work progresses. And then over the last year, we've had an award of an ARENA-funded government grant. So what this project in particular looks like is ARENA's committed to funding $4.24 million of the project, 73%. Indigo Power has to make a co-contribution, which is $1.5 million, 27% of the capital cost of the project. To install 680 kilowatts of solar. Now we're contracted to deliver 10 sites in the government grant, 1.3 megawatts of battery power and 4.2 megawatt hours of battery storage. However, since we submitted the application, battery prices have continued to drop, and we can now deliver much more battery capacity. So our current design is for delivery of 2.1 megawatt of battery storage and 5.8 megawatt hours of battery storage if we're able to raise the full $1.5 million. So sites right across, one in New South Wales, some in New South Wales, all the way down to Warburton, and Seymour, which is sort of closer to Melbourne. The Warburton site has a 100 kilowatt hydro generator on site already. Other sites, and that site and others, have been selected for, do they provide an energy resilience outcome? Do they have infrastructure on site that could host a really large solar system? So those are the best sites we've been able to find across the last 2 or 3 years of research. The benefits for the community, there's obviously that energy resilience outcome. A lot of the sites are emergency relief centres, so they will have significant backup storage in case of an emergency event when the community needs that evacuation facility. Environmental benefits, the site will be supplied with renewable energy. Indigo Power will share renewable energy from the facilities each evening to its local customers. There's a financial benefit to the host site, which pays less for its electricity to Indigo Power and its shareholders as an investment opportunity. It innovates in a really developing and important sector of the market at the moment, and supports the transition by working at the community scale. And there's an avenue for community participation in as well. And this is on the right, you see a readout of Indigo Power's energy sharing software. So you can see the batteries will be connected into that. And this red section there is the supply from the Yakandanda battery into the Yakandanda community. So people will get a good view of how much of their electricity is being shared from these batteries, which will be much bigger than the Yakandanda battery. And they can deliver network support, stabilise the grid and those sorts of things if called upon to do that. But for Indigo Power, it's a really significant step in scaling our business, taking our clean energy asset management from really where it's at the moment, a pilot, to a fully fledged part of our business. So it's going to develop our asset management business. In reaching that scale, it's going to mean these batteries can access new markets and generate the revenue we always intended that the community batteries should cover a lot of the costs of entering those markets and operating the batteries. It's a really material fleet in relation to our 1,700 retail customers. So we can now start to use that fleet of batteries to manage the risk of our retail business. And clearly it demonstrates our purpose, that we're having an impact. It'll add to our energy sharing software, and both of those things will differentiate our retail product, helping us grow our retail business as well. So we've got a grant agreement that's signed. We have full designs of all the sites. We've got confirmed quotes from our preferred supplier list of battery suppliers. We're currently finalising host site agreements with these sites, and we've been obviously negotiating them, including them on the journey for 2 years. And so now we're at the stage of council approval, for instance, of the lease and the power supply agreements to the host sites. We've been negotiating for that same amount of time with a loan for Bank WAW, and I'll provide more of an update in a moment. And we've done really comprehensive, our PhD engineer has done really comprehensive financial and operational modelling of these batteries using lots of the data, using a software system supplied by a third party that's really good at modelling these types of things. So we've spent a lot of time on that and done that really well as well. So details on the financing. So it's a $1.5 million co-contribution. So we're negotiating, in the final stages of negotiating, a fully secured loan with Bank WAW. Now, Bank WAW are securing that loan not against the batteries themselves, but against cash that's been placed in the bank in a term deposit by Indigo Power shareholders and supporters. So it makes it a really robust loan proposition for Bank WAW, a really good way for them to manage the risk of the loan. And because of that, and because of their interest in supporting the project, and Bank WAW being a local community-owned bank, they're offering concessional terms to Indigo Power. And our intention is, which is 1% below their secured commercial rate, And we're intending to have 2 years of interest only and an 8-year principal and interest payback on that loan, which leaves equity capital raise of up to $750,000 to deliver the remainder of our co-contribution amount. So in the equity crowdsource funding, we're not able to provide specific projections, but how the community battery business model works is they sell electricity to the spot market, and that's predominantly what they do. They're predominantly oriented towards exporting electricity, but most of the sites also have a pretty significant load at the site as well. So they sell electricity to the host site as well, which helps to manage the risk of the spot market price. If the generation is above 100 kilowatts, then they generate renewable energy, large-scale renewable energy certificates, and we can sell those. Frequency control ancillary service markets they can trade into and will trade into. And one of the sites at Tumbarumba has an electric vehicle charging station as well, a 100 kilowatt charging station. So it's another avenue to sell electricity generated from the solar and stored in the battery. So the costs associated with managing them are the network. If we're not charging from the on-site solar and we're importing from the grid, then we have to pay network charges, wholesale electricity costs, certificate charges. Then there's an operations and maintenance component about maintaining the systems, but also the cost of operating these and deploying these in various markets. A modest rent to the host sites through the lease agreement, insuring the batteries and interest on the loan as well. So next steps on the project. So we're finalising commercial agreements with the host sites at the moment. That'll happen over the next 2 months. Finalising the loan agreement with Bank WAW, which is currently under final credit assessment. And we're also obviously delivering this equity capital raise as well. At which point we'll be able to provide evidence to ARENA that we're able to meet our co-contribution and unlocking that $4.2 million ARENA grant, allowing us to procure for the first 3 sites in July and deliver the project between July 2025 and December 2026. So the summary is that we need to raise $1.5 million to unlock $4.2 million in government funding. And this will be really our largest, most important project to date, and it's going to deliver significant environmental and community benefits, but it's also going to be transformative for Indigo Power's business. We're obviously finalising the terms of that loan with Bank WAW, and this equity crowdsource capital raise is all about the remainder, that $750,000 that will be outstanding once the loan is complete. So I'll pass back to you, Mel, and open the floor to any questions.
Thank you so much, Ben. That was really a terrific presentation and such a important initiative. And we really hope that you can raise what you need to get this kick-started. I have a few questions here for you that have come through from the audience. Start off with, does the full public capital need to be raised in order for any or all of the projected sites to be established?
Yeah, so I guess that to rephrase that one is what happens if we don't raise the full amount. So we've got a we've already making a contribution to the project. So we have some working capital that we have already contributed to the project. Contributing a lot of that $750,000 from our operational cash flow is going to be impossible. So it needs to be towards the upper end of that range. And if it's not, $500,000 plus, then there's a likelihood that Indigo Power will need to go back to ARENA and say, change the terms of the contract. We do have, and that negotiation, one of the things on the table obviously there will be that they choose not to continue with the agreement. We haven't met the condition precedent, so that's a risk. The other buffer that we do have is that we're only contracted to deliver 4.1 megawatt hours of battery storage across 10 sites. And we've chosen, if we raise the full amount, we can really upscale that by 25-odd%. So there is an option for us to deliver the smaller sized project. But in that case, there's still a condition precedent in the agreement that says we need to demonstrate to them that, you know, our $1.5 million co-contribution we can meet. So there's options there, and the best option is to raise the full amount. An acceptable option is to say raise $500,000, and then anything less than that we will probably be entering a negotiation with ARENA, which you know, opens up that risk. Yeah.
There's a question here about the batteries. Are your batteries HV or LV connected? Are Tesla Megapacks a product you're looking at? And will you explore joining their VPP?
Yeah, so that's you know, I'm not the technical person. My understanding would be low voltage connected in the distribution area, and Tesla Megapacks is not what we're looking at. We're looking at, you know, we've got a preferred supplier list that doesn't include Tesla, but and then the VPP product that's something that we as a part of this project would set up our own mechanism for doing that. And these batteries, we've been working with Mondo as the controller, and we'd be able to, and we've been testing that algorithm. This scale will let us enter trade on the spot market, to enter FCAS markets as well. And so we intend to really set up our own virtual power plant, which can manage our own batteries, but also deliver that service through to local government, who are owners of these community batteries, and other third-party community owners of these community batteries that are starting to roll out through the Victorian government's 100 neighbourhood battery program. And for instance, the Yakko 2 battery in Yakandanda is totally renewable. Yakandanda won the funding. Indigo Shire Council are going to own the facility, and Indigo Power will operate that battery through the VPP it's developing.
Another one's come through here. Do you have energy price hedging contracts in place?
Yes, we do. At the moment, we've got, and this is I guess part of the point, is that we've got load following swaps at the moment, which are really low risk, high cost product. And part of the intention of this project is to, and we have been with our analyst working with an industry specialist, is to asking the question, how can we improve our retail margin by moving away from that really low risk product, taking on more risk ourselves, which we manage with these community batteries. So that an analysis is underway at the moment, but it would be changing from hedging, quarterly hedging in advance of the load following swap to something a little bit different. Yeah, but that would be only something we would do once we were confident in the reliability of the batteries, in delivering the reliability we need to confidently manage the risk of our retail portfolio.
Is there a sunset for the ARENA funding for completion or progress?
Yeah, June 10. So we need to come to ARENA with funding, with evidence that we can meet the co-contribution by June 10. So that's really about finalising the loan with Bank WAW over the next month or so, and completing this capital raise, which will close out in, you know, as May completes. Yeah.
How about the life expectancy of the batteries? Have you accounted for that in the costing?
Yeah, so we've modelled only a 10-year lifespan for the batteries. We expected lifespan is 15 years. The the news on batteries, the sector is changing so quickly. And for instance, there was always 80% usable capacity. The testing that's happening now, many of our preferred suppliers are now warranting 90% usable capacity, and warranting a further, 10-year lifespan. So we've modelled over a 10-year horizon, but we haven't gone beyond that. And but the expected life is we don't expect to replace them at 10 years. No, we expect them to still be operating to 15 plus years.
Why are you seeking to do an equity raise rather than just borrowing more money? Interesting question. You might want to answer that, Rick. I think that falls into the community focus, would you say?
Yeah, so one of the great challenges here has been community batteries are something so new that the banks don't understand what they're worth, and they don't perceive that they would be able, if we were to renege on our loan, they don't have confidence that they'd be able to retrieve their money by selling the batteries themselves. So at this point, the banks weren't interested, because this is the first major investment that Indigo Power is making in such an asset base. The banks weren't interested in using the banks as security. Using the batteries as security. So that's why we've decided to go for the equity raise as well. The bank loan, as Ben explained, is fully secured by cash. So some of the people present, if they're shareholders or on our contact list, would have been aware that we some months ago we put out a request for expressions of interest for larger contributions, and that was the process by which we secured the cash to go into the term deposits in Bank WAW. So the 800,000 loan is defined by the amount of cash we raised in that process, people bringing money in there. So, and that's what leaves the remaining amount that we need to raise as equity now. So in brief, we found that we couldn't raise the entirety of the capital through a loan, and that was largely because this is so new that the banks are not willing to loan against the batteries themselves.
That's very comprehensive. Thanks, Rick. There's another one here about the ARENA grant funding. If you need that funding, how will you scale a business in the future?
Yeah, that's a good question, and it sort of depends upon a few things. The first is there is a model where this works, but it's not particularly. It's looking at commercial sites, so it's sites that use much more power, where you're able to strategically manage the load of that business, and that's got a much better financial model. The reason this received so much government funding, in my view, is that it delivers much more than outcomes in the financial space. It delivers that energy resilience aspect, which I think moves. We've developed this model, and then we've had increasing interest in this model through, for instance, those councils, those 22 council sites that we've been working with to replicate this model across regional Victoria. So whilst it's not perhaps the best financial model at face value, there's an ongoing public interest piece where the Victorian government, other government levels, are interested in resilience and could potentially pay for a resilient service or something like that. And the other is the cost of batteries. And for instance, we said with that budget we'd deliver, when we submitted the application in June 2023, I think, or the original expression of interest, we said something like that figure. And then we revised it up in And when we submit the final application, and now a year later, we're revising it up by another 25%. So the cost of batteries is really declining at a really, really rapid rate. So the opportunities for Indigo Power for here are, one, continue to pursue the energy resilience aspects, and that's a service to government, really, who would be interested in buying that public service. Two is looking at more commercial models in the commercial sector, and how do we explore those? And that's this scale of battery. Three is to pursue further economies of scale by moving to larger solar farms and larger batteries. So that, I think, in terms of supplying our customers with renewable energy, has a better long-term prospect. And then the final one, our intention is to test. It's much easier to test the virtual power plant, establish confidence in the model, establish confidence in the revenue streams and costs with a virtual power plant of, say, 15 community batteries, as opposed to 1,000 residential customers. So the other opportunity is to take the lessons that we're going to learn here over the next few years and take them down into the household level to support our retail business.
Before you go on, Mel, could I add to that? The question is in part about ARENA. ARENA was established initially to drive innovation, to support the renewable energy transition on projects that banks and traditional funding mechanisms wouldn't support. So this was why federal government money was thrown in, was to drive innovative projects to help push this transition to a point where new things became commercial. So if you were to look at the things that ARENA has funded over the years, they started off funding things that are now just commercial reality, and there's a business model to go and do them. But to get them started, ARENA was putting up that upfront money to drive that change in the first instance. And community batteries are at that point too now, where we expect that in a few years it will be quite commercial for us to be investing in community batteries ourselves, as Ben was explaining. But in the first instance, the ARENA money is there to help drive this forward, to generate some scale and to help push those prices down to make it more commercially viable. So that's the purpose of ARENA.
And there's another one here. What is your expected? Okay, so there's a few questions here about finances. We're in the expression of interest phase at the moment, so we're not really permitted to talk about projections or anything like that at this stage. Just for those people on the call that are not familiar with crowdsource funding equity raises, you're basically purchasing in a company. Your shares are illiquid, and they don't become liquid until there is an event such as a trade purchase of Indigo Power or a listing on a registered stock exchange, such as the ASX, for example, or a private equity investment in the company, or a share buyback. So there are a couple of questions just around, dividends, etc. And so I just wanted to make that clear for people that have not experienced investing through a CSF fund before. So there are regulations around that. So hopefully that clears up a few of those questions. What else do we have here? Is there a plan to include customers with home batteries into your VPP to expand available storage? Will that model include incentives to encourage customers to give you access to their behind the meter assets?
Yeah, I think that's right. So I think the way we look at that a little bit is there was a really large expectation 3 or 4 years ago that type of model was really going to explode and play a really large role in the transition. That's been consistently downgraded across time in the AMO sort of system plans and those sorts of things. And I think the reason is that people want to be in charge and in control. So there's a bit of a balance there that for me, looking at that is to say, there's 2 ways we can have a really good renewable energy backed profitable retail business. One is that we develop a fleet of community batteries, community scale assets ourselves. Two is we try and incentivize customers to make the retail load more tractable. And so what that basically means is, as a for instance, we need to invest less in community batteries if customers are incentivized to use more power during the day, which we have a plan out there at the moment, and use less power themselves, or to in some way contribute over that peak period. So there's a number of things that we can look at to either, one, incentivize people not to use power during the middle of the day, or to incentivize them to use from the battery if they have one, preferentially during those times, or to set up some sort of VPP system where that Indigo Power in certain circumstances could deploy from those batteries themselves. So it's something I think we need to do in the first instance. What we're doing is price signals through our electricity plans, and that will probably be the first step from where we can go be a bit more sophisticated. But our model at the moment is very much like at the community level. It's not at the individual level. So there's no current plans to say have individuals trading with one another. It's about creating collective value at the community, which can be shared equally across, not necessarily equally, but it's keeping the whole community in mind rather than setting up a system that benefits only one cohort of the community.
There has been talk of such a model at the board level, but I guess I'd have to say the board is a little risk averse about making every change at once. So we're very supportive of this phase of growth and moving into the community battery phase, and looking forward to those community batteries having the scale to trade in frequency services as well as in electricity. There has been a discussion of going further to individual customers, but that is, as Ben said, we're not trying to do everything all at once. The board is certainly interested in seeing how this goes at the community level in the first instance.
Thanks, Rick. Thanks, Ben. Yeah, I just wanted to also just add that we're in the expression of interest stage at the moment. So we're getting market feedback around the interest and what's out there in terms of the range of and the parameters. So next week we go live with the offer, and for everyone listening, the full terms of the offer, the valuation, the share price, investors in the business, the last 12 months of financial statements, etc., will all be in the offer document, which will be available when the campaign goes live, which is kicking off on the 5th of May. So some of those questions will be answered within that in terms of those sort of, numbers and figures, etc. I think we might wrap up there, Ben and Rick. Have you got anything else you wanted to add before we finish off our webinar for today?
No, other than to perhaps add some commentary. I know we can't speak about the financials, but the stages of the business is sort of intended to cover that, and to be a bit more specific about that. We've over the past few years been investing in the business, and particularly around bringing these opportunities together to be able to roll out over the next few years. So basically, we're confident increasingly confident in the retail division. Project management has always been profitable, cyclical but profitable. And then the clean energy asset business is, it's been a lot of investment in staff time and that sort of thing has been over the last few years. So we're not profitable, but we've got now something like $5.8 million of contracts, grant and service contracts over the next few years. So basically, investing into the business, not reporting a profit, But what to show for that is all these confirmed opportunities that we've brought together, which will really contribute to the scaling of the business. So it's really about, this capital raise is really about transitioning from, from developing those really strong foundations to transitioning to a scale and grow model, with the retail a little bit, with the clean energy assets absolutely, and strategically with the project management as well. And with the project management really intending to, if we can work on projects that wrap back into our asset management portfolio as well, which is really about delivering more community batteries for third parties.
I think that's fantastic. And we love sustainable founders and with noble causes. So we really hope that this is a huge success, this raise, for you, Rick and Ben, and for our communities around Victoria and beyond that are looking for sustainable energy solutions. So thanks again for today, and we will pop this up onto the platform, and good luck for your raise next week.
Wonderful. Thanks, Mel. Thank you, everyone.
Thank you, everybody, for coming.
Thanks, everyone, for attending. Bye.